Greetings and good day. I hope you're doing great. I'm here with the daily Ethereum analysis for March 27th. We're looking at the daily time frame. We can see that at the start of the week, Ethereum's price grew. After the price reached around $2,200, it faced rejection and couldn't close any higher. Finally, with the risk of
learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
aversion seen yesterday in financial markets, Ethereum's price dropped to the weekly open range. Today, the price has been fluctuating between $2,040 and $2,080, with no clear direction yet. We're examining the flow of liquidity in and out of Ethereum ETF funds. You can clearly see that yesterday saw the single largest capital outflow in the past month for Ethereum ETFs, and the fear and greed index dropped down to 28, remaining firmly in the fear zone. These various factors quite clearly demonstrate the prevailing risk aversion that exists within the crypto market. As can be seen on the 4-hour chart, the price was moving in an ascending channel, forming higher highs and higher lows, but it ultimately broke downwards just yesterday. Earlier this week, Ethereum demonstrated strong and notable support around the price level of $2,025. If this important support level is lost, meaning if the price falls below this point, the price could potentially drop further, possibly moving down to the 4-hour order block, which is located near $1,964. According to the recent news, the temporary suspension of attacks on Iran's energy infrastructure has reduced immediate market risk. However, ongoing geopolitical tensions persist, and if they continue, capital may exit risky markets, further strengthening the US dollar. As a reminder, at the very beginning of the Middle East tensions, we observed that as the war began and oil and energy prices started to rise, the prices of many different crypto assets also increased. This was contrary to predictions, as many analysts expected the crypto market, being high risk, to experience a more significant decline and downturn. However, we observed that after the war started, there was significant growth in the prices of crypto assets. But over the past week, crypto's movement has become noticeably more rational and predictable. We tend to see growth in the market when geopolitical tensions ease, and price drops occur when negative news or increased tensions emerge. Consequently, in these conditions, while we see rising oil and energy prices, we can expect the current drop in Ethereum's price to continue. We are currently reviewing the Ethereum liquidity map. Here we can see that the buy-side liquidity near the current price is situated around the $2,100 range. Beyond this area, the primary buy-side liquidity sits above previous highs in the $2,200 region. Similarly, we can look at previous lows as the closest sell-side liquidity levels to the current price. By examining these areas on the chart, we see the main buy-side liquidity aligns with the 50% line of the 4-hour and 1-hour BPR zones, making this range highly significant. As mentioned, we expect the downward movement in Ethereum's price that began yesterday to continue, so if we see liquidity being swept above previous highs, or even reaching the 4-hour and 1-hour BPR zones, we can enter sell trades targeting lower levels like the 1-hour order block around $20-25. In the recent candle, you can see heavy selling pressure on Ethereum's price, and it could reach the 1-hour order block zone even before this liquidity is swept. Good luck and stay profitable.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.